Get ready for the week's hottest TSX stocks as we dive into NorthFlow Finance AI's top 12 picks from May 11th and uncover the biggest winners and losers. We're starting off our weekly review with Quantum Emotion, ticker symbol QNC.V, where we detected a MACD bullish crossover combined with a volume surge on May 11th. This signal caught our attention, and we're taking a closer look at how it's performed over the past week. The MACD bullish crossover plus volume surge signal is a pretty strong indication of a potential trend reversal, and at the time, it suggested that QNC.V was gearing up for a move upwards, with the relative strength index at 53.4, which is relatively neutral, and a volume surge of 161.1%, which is quite significant. This volume surge was a key factor in our decision to take a closer look at this stock. The fact that the MACD lines had crossed over in a bullish manner also added to our confidence in this signal. This week, QNC.V actually declined by 1.3%, which may seem counterintuitive given the bullish signal we detected last week. It opened at $3.76, reached a high of $4.18, and a low of $3.64, before closing at $3.71. Despite this decline, we're not ready to write off the original signal just yet, as the stock's overall trend is still worth monitoring. In recent news, Quantum Emotion made a significant move by acquiring SKV and Jet Lab Technologies, which is expected to position the company as a full-stack cybersecurity provider. This acquisition could be a game-changer for QNC.V, and it's possible that the market is still digesting the implications of this move, which could be contributing to the stock's recent decline. This development is likely to have a significant impact on the company's future prospects. As we look ahead to next week, we'll be watching to see if QNC.V can regain its momentum and start moving upwards again. Viewers should keep an eye on the stock's volume and relative strength index to see if they can provide any clues about its future direction. Now let's move on to our next stock. We're taking a closer look at stock AMX.V, where we detected a signal on May 12th. This signal was triggered by a MA Golden Cross combined with a significant volume surge, which caught our attention as a potential buying opportunity. The MA Golden Cross is a bullish indicator where the short-term moving average crosses above the long-term moving average, suggesting a shift in momentum. At the time of the signal, the RSI was at 55.4, indicating the stock was not overbought, and the volume surge of 1,031.7% showed strong investor interest. This combination of factors suggested a potential upward trend for AMX.V. This week, the stock gained 1.4%, opening at $5.03, reaching a high of $5.32, and a low of $4.99, before closing at $5.10. This relatively stable performance could be seen as validation of the original signal, as the stock has continued to hold its ground. The stock's ability to stay above the $5 mark is a positive sign, indicating that investors are still confident in its potential. Recent news of Amex Exploration beginning a significant drill program at Perone West in Ontario likely contributed to the stock's stability this week, as investors await results from this major exploration effort. This development could be a major catalyst for the stock's future performance, and investors are likely eager to see the outcomes of this 15,000-meter drill program. As we look ahead to next week, viewers should watch for continued stability and potential upside, as well as any updates on the drill program's progress. If the stock can maintain its current momentum, we may see further gains in the coming weeks. Now let's move on to our next stock. We're looking at stock number 3 of 12, SCZ.V, where a signal was detected on May 12, 2026, with an entry price of $12.86. This signal was triggered due to a combination of a moving average golden cross and a significant volume surge, which is a pretty strong indicator of potential upward momentum in the stock. The MA Golden Cross plus volume surge signal is a technical indicator that suggests a potential trend reversal, where the short-term moving average crosses above the long-term moving average, and in this case, it was accompanied by a volume surge of 53.9%, indicating strong buying interest. At the time of the signal, the RSI was at 60.9, which is a relatively neutral level, not overbought or oversold. This signal suggested that the stock might be poised for a rally, and investors were likely expecting some upside movement. This week, however, SCZ.V declined by 3.9%, opening at $12.51, reaching a high of $14.28, and a low of $11.71, before closing at $12.02. This decline may raise some questions about the validity of the original signal, but it's not uncommon for stocks to experience some volatility after a strong signal. The stock's failure to hold its gains may be a cause for concern, but it's still too early to say whether this signal was a false positive. Recently, there was a headline discussing how the Q1 2026 results and the Bolivar recovery will impact Santa Cruz silver mining investors, and it's likely that this news had some impact on the stock's weekly performance. The article likely discussed the company's financials and the potential for the Bolivar recovery to drive growth, and investors may be waiting to see how these factors play out before making their next move. As we look ahead to next week, investors should watch for any follow-through on the downside, as well as the company's ability to bounce back from this week's decline. Viewers should also keep an eye on any news or updates related to the Bolivar recovery and how it may impact the stock's performance. Now let's move on to our next stock. We're reviewing stock number 4 of 12, BlackRock Silver, which trades under the ticker BRC.V, and we detected a signal on May 12, 2026. This signal was a moving average golden cross combined with a volume surge, which caught our attention as a potential buying opportunity. The moving average golden cross plus volume surge signal is a bullish indicator that suggests a potential trend reversal, and at the time, it meant that the stock's short-term moving average had crossed above its long-term moving average, accompanied by a significant increase in trading volume, which was up 42.7%. With an RSI of 64.2, the stock was not overly extended at the time, and the volume surge added conviction to the signal. This combination of technical indicators and increased investor interest made a strong case for a potential upward move. This week, however, the stock declined 4.5%, opening at $1.34, reaching a high of $1.55, and a low of $1.25, before closing at $1.28. Despite this decline, the stock's price action remains above the entry price of $1.41, which suggests that the original signal still has some validity. The stock's inability to hold onto its gains may be a cause for concern, but it's not necessarily a signal to exit the trade just yet. Recent news about Tonopah West permits and drilling progress has changed the investment story for BlackRock Silver, as it suggests that the company is making progress on its projects, which could be a positive catalyst for the stock in the coming weeks. This news may have contributed to the stock's attempt to rally earlier in the week, but it ultimately fell short, and the stock ended the week lower. As we look ahead to next week, investors should watch for whether the stock can regain its momentum and break above the $1.55 level, which could be a sign of renewed strength. If the stock can hold above its recent lows, it may be a sign that the bulls are still in control, and the original signal remains valid. Now let's move on to our next stock. We're taking a closer look at AUXX.V, a stock that caught our attention when our system detected a signal on May 13, 2026. This signal was particularly interesting, so let's dive in and break it down. The signal we detected was a moving average golden cross combined with a volume surge, which is a pretty bullish indicator, and at the time, the Relative Strength Index, or RSI, was sitting at 67.1, indicating the stock was getting a bit overbought, but the volume surge of 605.4% was a major red flag that something was brewing. The golden cross itself is a sign that the short-term moving average has crossed above the long-term moving average, which can be a signal that the trend is shifting upwards. When you combine this with the massive volume surge, it's a pretty strong indication that investors are getting on board with this stock. This week, AUXX.V gained 6.1%, opening at 148, reaching a high of 175, and a low of 148, before closing out the week at 157. This performance is somewhat validating the original signal, as the stock has continued to trend upwards, although it's worth noting that it did pull back a bit from its highs. The fact that it's holding above the 150 level is a positive sign, and we'll be watching to see if it can break back above 175. There was some positive news out this week, with analysts suggesting that they're not too concerned about Gold X2 mining's cash burn rate, which is a major factor for a lot of investors, and this could be contributing to the stock's recent strength. This news could be helping to alleviate some of the concerns that investors may have had, and is likely a factor in the stock's continued upward trend. Looking ahead to next week, we'll be watching to see if AUXX.V can continue to build on this momentum, and whether it can break through any resistance levels that may be forming. We'll also be keeping an eye on the RSI, to see if it starts to get too overbought, which could be a sign that the stock is due for a pullback. Now let's move on to our next stock. We're taking a closer look at EIF.TO, a stock that caught our attention when a signal was detected on May 13. This signal indicated a potential buying opportunity, and we're here to break down what happened and where the stock is headed. The MA Golden Cross Plus volume surge signal is a strong indicator of a potential trend reversal, and when we saw this signal on May 13, it meant that the stock's short-term moving average had crossed above its long-term moving average, coupled with a significant increase in trading volume, which was up 75.8%. At the time, the RSI was at 54.7, indicating that the stock was not overbought, and the entry price was $104.47. This signal suggested that the stock was poised for a potential uptrend, and investors should take notice. This week, EIF.TO gained 7.8%, opening at $99.06, reaching a high of $109.49, and a low of $97.39, before closing at $106.74. This performance is a strong validation of the original signal, as the stock has continued to trend upward. The stock's ability to hold its gains and close near its high for the week is also a positive sign. The move upward is a good indication that the signal was correct. The recent earnings call highlights for exchange income provided some insight into the company's performance, and it seems that the positive results have contributed to the stock's upward momentum this week. The company's solid financials and outlook likely played a role in the stock's 7.8% gain. Overall, the earnings call seemed to reinforce the positive trend. As we look ahead to next week, investors should watch for continued momentum and potential resistance levels that the stock may face. Viewers should also keep an eye on any upcoming news or announcements that could impact the stock's price. Now let's move on to our next stock. We're taking a look at stock number 7 of 12, ODV.V, where a signal was detected on May 13, 2026, indicating a potential buying opportunity. This signal was triggered due to a combination of a moving average golden cross and a significant volume surge. The moving average golden cross, combined with a volume surge of 30.4%, suggested that the stock was gaining momentum and potentially poised for a breakout. At the time of the signal, the relative strength index was at 46.0, indicating that the stock was not overbought, which added to the bullish sentiment. The entry price was $4.62, and with the volume surge, it seemed like a good time to get in on the action. This week, however, the stock declined by 3.0%, opening at $4.35, reaching a high of $4.76, and a low of $4.19, before closing at $4.22. This decline may raise some questions about the validity of the original signal, but it's not uncommon for stocks to experience some volatility after a strong move. The weekly performance is a bit of a mixed bag, but it's still early days for this trade. We'll need to keep an eye on it to see how it plays out. In recent news, Osisco Development has appointed a new vice president of construction contracting, which could be a positive development for the company's operations and future projects. This appointment may have contributed to the stock's attempt to rally during the week, but ultimately, it wasn't enough to overcome the downward pressure. The new VP's expertise could help the company navigate complex construction projects, which is a crucial aspect of their business. As we look ahead to next week, viewers should watch for whether the stock can regain its footing and start to move higher, or if the decline will continue. We'll also be keeping an eye on any further news or developments that could impact the stock's performance. Now let's move on to our next stock. We're taking a look at stock number 8 of 12, which is WED.V, and the signal was detected on May 13. This signal was a combination of a MACD bullish crossover and a significant volume surge, which caught our attention as a potential buying opportunity. The MACD bullish crossover is a strong indicator of a trend reversal, and when you combine that with a 200% volume surge, it's a pretty compelling signal that something's going on with the stock. At the time, the RSI was at 51.0, which isn't overly extended, so it seemed like there was still room to run. The entry price was $23.98, and we were looking for a potential move higher. This week, however, the stock declined 1.2%, which isn't ideal, and it's making us question whether the original signal was a false positive. It opened at $23.35, reached a high of $24.01, and a low of $22.76, before closing at $23.07. The weekly performance is a bit disappointing, but we're still waiting to see how things play out. In terms of recent news, Westaim just released their Q4 earnings snapshot, which might have had a negative impact on the stock's performance this week, as investors digested the results. The earnings report seems to have put a bit of a damper on the stock's momentum, at least in the short term. Looking ahead to next week, we'll be watching to see if the stock can regain its footing and start moving higher again, or if this is the start of a larger pullback. Viewers should keep an eye on the stock's ability to hold its current levels and potentially break out above $24. Now let's move on to our next stock. We're taking a look at stock number 9 of 12, which is POU.2, and the signal was detected on May 13th. The MACD bullish crossover plus volume surge signal was triggered at an entry price of $30.88, with an RSI of 70.5 and a significant volume surge of 159.6%. The MACD bullish crossover indicates a potential trend reversal, and when combined with the volume surge, it suggests strong buying momentum. At the time, this signal was quite bullish, indicating that the stock was likely to move higher. The high RSI reading did raise some concerns about overbought conditions, but the volume surge helped to validate the signal. This week, POU.TO gained 8.4%, opening at $29.56, reaching a high of $32.06, and a low of $29.07, before closing at $32.06. This performance is quite impressive and validates the original signal, as the stock was able to break through resistance levels and continue its upward trend. The stock's ability to hold its gains and close near its high for the week is also a positive sign. Paramount Resources recently released their Q1 results, and National Bank has maintained their sector perform rating while raising their price target to $38. This upgrade is likely a factor in the stock's strong performance this week, as it suggests that analysts are becoming more bullish on the company's prospects. The raised price target also provides a clear level to watch for in the coming weeks. As we look ahead to next week, viewers should watch for whether POU.TO can continue its upward trend and potentially reach the new price target. We'll be keeping a close eye on the stock's momentum and any potential pullbacks, as this will help to determine whether the trend is sustainable. Now let's move on to our next stock. We're looking at stock number 10 of 12, Reg.V, where we detected a signal on May 14, 2026. This signal was a moving average golden cross combined with a volume surge, which is a pretty strong indication of a potential trend reversal. The MA Golden Cross plus volume surge signal is a technical indicator that suggests a shift in market sentiment, and at the time, the RSI was at 48.6, which is relatively neutral, and the volume surge was up 47.4%, indicating a significant increase in trading activity. This signal told us that there was a potential buying opportunity, and we entered at $4.07. The volume surge was a key component of this signal, as it showed that there was real buying interest behind the move. This week, the stock declined 1.7%, opening at $4.05, reaching a high of $4.30, and a low of $3.87, before closing at $3.98. This performance doesn't necessarily validate the original signal, as we would have liked to see some follow-through to the upside. However, it's still early days, and we need to give the stock some time to develop. The decline this week could be a normal consolidation after the initial move. There was a recent article highlighting promising TSX penny stocks under $500 million market cap, and Reg.V was mentioned as one of the potential picks, which could be a positive catalyst for the stock. This mention could help increase investor interest and potentially lead to a rebound in the stock price. The article highlights the potential for growth in these smaller companies, and Reg.V is well positioned to take advantage of this trend. As we look ahead to next week, we'll be watching to see if the stock can regain its momentum and break above the $4.30 level, which would be a positive sign. We'll also be keeping an eye on the volume to see if it can continue to support the move, as this will be a key indicator of the stock's potential for further growth. Now let's move on to our next stock. We're reviewing stock number 11 of 12, FTT.TO, where we detected a signal on May 14. This signal was triggered due to a MACD bullish crossover combined with a significant volume surge. The MACD bullish crossover plus volume surge signal indicated a potential buying opportunity, as the stock's momentum was shifting upwards, and the volume surge showed strong investor interest, with an increase of 105.9%. At the time of the signal, the RSI was at 62.0, which was not in overbought territory, adding to the bullish case. The entry price for this trade was $105.04. This week, FTT.TO gained 4.4%, opening at $97.97, reaching a high of $106.15, and a low of $94.90, before closing at $102.24. This performance seems to validate the original signal, as the stock continued its upward momentum. The stock's ability to hold its gains and close near the high of the week is a positive sign. The weekly performance suggests that the bullish trend may continue. Finning International recently held its Q1 earnings call, which highlighted the company's strong performance and positive outlook, likely contributing to the stock's weekly gain. The earnings call seemed to reassure investors, which is reflected in the stock's price action. The company's solid financials and growth prospects may continue to drive the stock's price upwards. Viewers should watch for continued momentum and potential resistance levels next week, as well as any upcoming news or announcements that may impact the stock's price. The stock's ability to break through key resistance levels will be crucial in determining its future direction. Now let's move on to our next stock. We're taking a look at stock BN.TO, where we detected a signal on May 15th. The signal we detected was a MACD bullish crossover combined with a volume surge, which is a pretty strong indicator of potential upward momentum. The MACD bullish crossover plus volume surge signal is a great combination, indicating that the stock's momentum is shifting to the upside, and the volume surge of 47.5% really added to the conviction of this signal. At the time, the RSI was sitting at 60.5, which isn't overly extended, so there was still room for the stock to run. This signal suggested that BN.TO was poised for a potential breakout, and we jumped in at an entry price of $65.25. This week, however, BN.TO declined 2.2%, which isn't exactly what we were hoping for. It opened at $64.07, reached a high of $66.75, and hit a low of $61.84 before closing out the week at $62.68. Despite this decline, the weekly range wasn't extremely wide, so it's possible that the stock is just consolidating before making its next move. The question is, does this performance validate the original signal? And in our view, it's still too early to tell. In recent news, Brookfield Corporation just released their latest report, and it seems like there are a few key takeaways that investors should be aware of. Apparently, there are some positive developments that could impact the stock's future performance, and it's possible that this news contributed to the stock's decline this week as investors digested the information. Looking ahead to next week, we'll be watching to see if BN.TO can bounce back from this week's decline and whether the MACD bullish crossover signal will ultimately prove to be correct. We're expecting to see some increased volatility, so it'll be important to keep a close eye on the stock's price action. That wraps up our weekly review. Subscribe for daily TSX signals from NorthFlow Finance. Thanks for tuning in, subscribe for more, and remember, this isn't financial advice, consult a professional before making decisions.